All right, hi everyone. Welcome to today's webinar brought to you by IronFX, where today we'll be looking at the breaking news and setups. I just want to make sure you guys can hear me loud and clear and see my screen as well. You should see the first page of the presentation slides, IronFX webinar series. Right, before we start, do not hesitate to drop your questions in the Q&A box or the chat box as we go along today's webinar, right? So if you have any requests for any currency pairs, commodities, or indices, do drop them in the chat box early so we have time to go through the analysis together. All right, okay, before we start, let's take a look at, please take note of the risk warning and the disclaimer as well, right? The products that are traded here on margin and carry a high level of risk, and it is possible to lose all your capital. And also take note of the disclaimer that the information in this webinar should not be considered investment advice or an investment recommendation, but instead is educational material only. All right, morning, Alinda. Right, great to see all of you tune in on time. All right, so let's get things moving. All right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, all right, of course, looking at the breaking news events, right, we've got a few things lined up this week, today and tomorrow. Well, the most important one for today is going to be the ECB monetary policy statement, right? That's going to be released today at about, I believe it's about what is it? 2 p.m. GMT time. Okay, once I bring up the calendar, we'll see exactly what time it's going to be released. We've also got US PPI data, which is Producer Price Index. This measures the level of inflation in the wholesale sector. Right after seeing yesterday's CPI data come in hotter than expected, right? This was for the third month in a row. We are quite likely to see PPI come in hot as well, right? And of course, we also have unemployment claims coming up at the same time as PPI, and tomorrow we've got UK GDP data as well. All right, so here's the calendar from Forex Factory. Take note, I'm on GMT time. So the ECB is going to release its monetary policy statement at 12:15 p.m. GMT. So currently, the main refinancing rate sits at 4.5%. It's currently, and market expectations are for the ECB to keep this rate on hold. We've also got PPI data coming up at 12:30 p.m. GMT time, and then followed by unemployment claims as well. And half an hour after the statement is released by the ECB, President Christine Lagarde will also be delivering her press conference. So take note, at 12:45 p.m. GMT time, Christine Lagarde's press conference is very likely to inject further volatility for the euro later today. And of course, tomorrow we've got UK GDP data. This is the monthly GDP data that's going to be released at 6 a.m. GMT time tomorrow. All right, okay. So as you can see, the ECB has kept its main refinancing rate on hold at 4.5%. Right, I think this is prior to today's meeting. They've kept the rate steady for the fourth meeting in a row. And also we have the press conference followed on half an hour later. However, if we look at inflation in the euro area, on the left I have the chart for headline CPI, and on the right I have the chart for the core CPI, both on an annualized basis. We can see that they're both metrics or both indices have retreated quite significantly, right? They've headline CPI is probably about, if I'm not mistaken, about 2.5%, and core CPI is probably around 2.9%, right? Both of which have moderated quite significantly over the last year and are inching closer towards the target of 2%. Now, because of this, we may potentially see a surprise rate cut by the ECB today. So take note of that. Inflation has retreated quite significantly over the past 10 to 12 months, and the current levels are pretty close to the target of 2%. So this may be enough for this current level of inflation may be enough to nudge the ECB into a surprise rate cut today. So maybe they could they could cut rates by 25 basis points. That means they could go from 4.5% down to 4.25%. However, if they do not cut interest rates, they are still quite likely to lean on the dovish side. That means they may project, or they may give us clues that they are likely to cut rates at the next meeting, right? Okay, so the next meeting I believe is in June, right? I think it's on 6th of June. So even if they do not cut at today's meeting, they're quite likely to communicate a dovish outlook. So with that, the euro is quite likely to weaken during the rate cut statement, and also during the press conference. We, depending on how President Lagarde communicates the outlook for future monetary policy, it could either continue to weaken the euro further, or she may turn out to be quite well balanced, and that could then cause a reversal in the euro. All right, up next at 12:30 p.m. GMT time, we have PPI data, right? PPI is Producer Price Index. This is going to be released at 12:30 p.m. GMT time, right? After we saw yesterday's CPI data come in hotter than expected, right? When we saw headline CPI and core CPI accelerating on a monthly basis and on an annualized basis as well, it's quite likely we are going to see a similar outcome for the PPI, right? So on the left here, I have the headline PPI, the chart for headline PPI, and on the right, I have the chart for core PPI, both on an annualized basis or year over year. So when we look at the headline PPI reading, we can already see that it accelerated in for the month of February, and the reading for March, which is here, is expected to show further acceleration from 1.6% here. Take note, March reading is here at 1.6%. We are expected to see further acceleration from 1.6 to 2.2%. Similarly, for the core PPI, which currently sits at 2%, is also expected to accelerate to 2.3%. However, the monthly data looks to increase at a slower rate. However, take note, the annualized readings are expected to accelerate quite strongly. So should we see PPI data come in hotter or higher than its respective estimates here, the monthly and annualized readings, right? We are likely to see the dollar bulls return in full force once again, and that means the dollar index is likely to spike once more as it did yesterday, which of course will cause currency pairs like the euro, the pound, the Aussie, and Kiwi to fall, and could even potentially limit the recent rise in gold prices as well. Right, and at the same time, at 12:30 p.m. GMT time, we also have unemployment claims in the US. So unemployment claims track is a weekly data point that tracks the number of Americans that file for unemployment benefits. So if you have a number that's rising strongly, as what we saw in the first half of 2023, this highlights a potential softening of the US labor market, because that means that when you have more claims and data is higher than the estimate, that usually means that more people are filing for unemployment benefits. That means hiring practices are slowing down and more people are being laid off. Obviously, the opposite happens as well. When you see unemployment claims trending lower and also coming in lower than their estimates, this means that there are less people in the US filing for unemployment benefits, and typically means we have a stronger or more robust labor market, right? So last week's data saw a spike of 221,000. It came in much higher than its estimate, and also it was the highest reading in the last 6 weeks or so. However, if we do see unemployment claims come in lower than this estimate of 216,000, then this would be another bullish catalyst for the dollar. Right, so how can we interpret this data? Right, so take note, this week's forecast is 216,000. Last week's data came in at 221,000. So if the actual result, which is unemployment claims, comes in more than 260,000, that means there are more than expected people filing for unemployment benefits. This is likely to function as a bearish catalyst for the US dollar. So that means currency pairs like the euro, pound, Aussie, Kiwi are likely to rise, along with gold prices as well. Conversely, if claims come in less than 260,000, that means there are less people filing for unemployment benefits. This would signal that the US labor market is still robust. So that would most likely translate into a bullish catalyst for the US dollar. So of course, that would mean currency pairs like the euro, pound, Aussie, and Kiwi are likely to fall along with gold prices, right? So this is how we can interpret the claims data later today. And of course, we've got UK GDP up tomorrow. on 12th of April at 6 a.m. GMT time. So January's reading came in at about 0.2%. There was a decent growth of 0.2% following a month of contraction in December. And February's data points to a slower growth of 0.1%. Right. So should we see, okay, UK composite PMI data has been quite steady over the last few months. So should we see the GDP result come in higher than 0.1% tomorrow? This could then potentially function as a bullish catalyst for the pound and could help keep and could provide some much needed support for the pound dollar. All right, okay, with that, then let's move on over to the charts on TradingView, and we'll start our analysis with the dollar index, of course, right? So once we know how the dollar index is trading, that would naturally it's easy for us to translate into what the other currency pairs and gold prices are doing as well. All right, okay. So right here I am on the chart for dollar index. I'm currently on the daily time frame, right? So as you can see, yesterday's candle, 10th of April, you can see the dollar index spiking from about 104 going as high as 105.27, right? So if I jump into the 1 hour time frame, right, we can see this data point. This US CPI data was released at it was released at 12:30 p.m. GMT time. Take note, I'm on UTC plus 0, so that's GMT time. So you can see here, prior to the release of the US CPI data, the dollar index was trading around 104, and within minutes it spiked up to as high as 104.82, right? And it went as high, session high of 105.30, right? And after that it pulled back as Asian markets came online, and for most parts of today, it was just trading around 105.15. But as European markets came online, right, we saw a brief spike in the dollar index as well, a pullback again, and before going up. So, right, you can see today, based on the current price action, right, this is a pretty decent intermediate support level for the dollar index, right, at 105.10. So, I would like to highlight this level as intermediate uh, support level. Right, okay. Now we're going to go uh, switch back to the 4 hour time frame and start our analysis. And also, I would also like to point out, right, this overnight high is a level where price ran into resistance once more for the dollar index as European markets came online. So I would like to highlight this level at 105.30 as an intermediate resistance for now. Of course, we might fine tune the analysis as we move along, but yeah, for now, as you can see here on the 30-minute time frame, the immediate support and resistance levels for the dollar index lie at 105.10 and 105.30 respectively. All right, so now let's move on over to the 4 hour time frame and try and find the major resistance and support levels as well. Right, okay, so when I look across this price level here where the intermediate support had been identified on a 30-minute chart, we can actually see that this level is actually corresponding to a previous pullback resistance here that occurred on the 1st of April, right? So this is a pretty significant level here. So this creates an overlap level, right? Previously we had resistance at the beginning of April, and now today we have strong support as well. So because of that, I'm going to identify 105 0.07 as my first major support for the dollar index based on the current 4 hour time frame. Right, no changes to the intermediate resistance. That's still at 105.30. Now, where could the next major resistance for dollar index be? Right, let's zoom out a little bit. So when I look at the price action or the market structure in November of 2023, right, let's just zoom in a little bit so it's a bit more clearer. So between end of October and mid-November 2023, we can see that this price level here at 105.96 was a pretty significant overlap level. Right. Previously, at the end of October, the dollar index found strong support at 105.96 before bouncing to go higher. Found decent support again on 2nd November. You can see the wick of course protruding below this support level, but it did bounce back quite strongly. However, of course, then in early November, at the beginning of November, the dollar index broke under this level. However, as it retraced higher, toward in mid-November, it failed to break above 105.96. So this then creates an overlap resistance, right? This creates an overlap resistance, which is what we're going to use to help us identify as our first major resistance for the dollar index. So that's how we've identified the first major resistance. And we've also identified an intermediate resistance at 105.30, which was basically the overnight high during yesterday's US session, as well as another resistance that occurred at the beginning of today's European session. All right, okay, so these, now what about support? What could there be another support level that we could potentially identify? Okay, there's another level because 105.96 is a little bit far from where price is currently trading, perhaps. But if I were to try and identify another intermediate resistance level, that would probably be around 105.45. Now, why is this another intermediate resistance level? Right, you can see previously this level here, the dollar index found decent support here at the beginning of November, bouncing off 105.45 several times before going as high as the first resistance and then finally breaking underneath it. So this was previously functioning as a pretty decent pullback support level, which could now function as a potential resistance. Right, so take note, we've got a pretty decent resistance zone for the dollar index between 105.30 and 105.45 right now. What about second support level? Right, the next major support level that I see for uh, the dollar index is going to be at 104. That exactly, right? This was the support level that has been respected since 26th of March, right? You can see prices bounce at this level about 3 or 4 times, right? So this is where the second support lies for the dollar index. All right, okay. I think we may be able to use a Fibonacci extension as well. So to find this extension level, I'm going to use a Fibonacci retracement. So I'm going to start this retracement from here, 2nd of April, going down to the low here on the 9th of April. Remember the key or the major extension levels lie at 137% and 161%. So we can see quite clearly already 137%. The extension at 137% aligns pretty well with this intermediate resistance that we had identified at 103.45. And we can also see that the first resistance at 105.96 also aligns quite close to the extension at 161%. Right. So if we see, remember we've got PPI data coming up today. We've also got unemployment claims. So should both of these data points suggest, or should both of these data points function as a bullish catalyst for the dollar index, we're quite likely to see it break above this intermediate zone that's between 105.30 and 105.45. And should that were to happen, we can then use the Fibonacci extension at 161% to help us identify a suitable take profit zone. Right, so take note, should we see unemployment claims and PPI come in, or well, if PPI comes in hotter than expected and unemployment claims come in lower than the forecast, this is going to likely to function as a bullish catalyst for the dollar index. So that means we could likely see dollar index break above this intermediate resistance zone and make a drive towards the Fibonacci extension at 161.8%. So this area here, this region of the first resistance would be a good area to identify a potential take profit zone for any long dollar index positions. Right. So of course, if dollar index is going up in that scenario, then of course currency pairs like the euro, the pound are likely to fall. Aussie, Kiwi also likely to fall, and of course dollar franc, dollar yen are likely to move higher as well. All right. So these are the key levels that I have for the dollar index at the moment. All right, hi Alinda. Oh, okay. Could you share this Fibonacci setup, please? If you do lesson now. Okay. We could. I think there was a Fibonacci webinar that was conducted maybe a couple of months ago. Let me see if I can find out when the next one is coming up, and I'll definitely let you know. Otherwise, if there's nothing coming up, I can make a request for Fibonacci masterclass webinar to be conducted in the due time as well, right? Okay, no worries. Right, so I mean, just a quick recap on Fibonacci. Your Fibonacci retracements, which means are the levels that lie between 0% and 100%. We have Fibonacci extensions, which are levels that are greater than 100%. That means at 127% and 161%, right? So Fibonacci levels help us to identify potential resistance and support areas, right? Okay, so we can get more into that. I'll quickly check when, or after this webinar, I'll check when is the next uh, schedule for Fibonacci Masterclass. And then if there isn't one any in the next couple of weeks, I can make a request to have one scheduled. Right, okay. So these are the key levels for the dollar index on the 4-hour time frame. And also take note of how uh, PPI data, unemployment claims, and even the ECB interest rate decision later today could impact the direction of the dollar index as well. All right, okay. So with that, let's look at the euro since we have a major event coming up for the euro today, right? And similarly for, all right, okay, most welcome, Melinda. So right, remember as we saw the dollar index spike at 12:30 p.m. GMT time yesterday, right? Of course, the dollar index spiked during that period. Of course, we're likely to see the euro plunge as well. So we saw the euro, which was trading about 1.0860, drop as low as about 1.0730, right? So losing about, was it 70, 100, 130 pips pretty much, right? About 130 pips overnight. It did retrace and then consolidated for most parts of the Asia session before dipping a bit lower as European markets came online, but it retraced higher once again and does look to be edging lower again. All right, so we could see, right, especially if the statement and if the press conference by President Christine Lagarde turns out to be quite dovish, we're likely to see the euro sell off even more, right? Okay, so as you can see here, price has failed to break above this level of 1.0750. So I would like to highlight this level as an inter intermediate resistance level for the euro. Right, this take note we are on the 30-minute time frame for now. Of course, we may fine tune the analysis as we move on. And in terms of intermediate support, right, we can see this currency pair has failed to break under 1.0730 since yesterday. So I'm going to highlight this level as an intermediate support. Right, so you can see it's been ranging between these two levels since 1600 hours GMT time yesterday, and is looking for the next catalyst, which is naturally going to be the ECB interest rate decision. Right, okay, now let's switch back over to the 4-hour time frame and try and fine tune the analysis. Right, now when we look at things on a slightly higher time frame, we can see that the euro has bounced off 1.0730 quite strongly at the beginning of April. Right, we can see the market structure showing us a very significant swing low bounce here, right? You can see that here price found strong support around the region of 1.0730 at the beginning of April to bounce strongly, right? So this is very clearly a strong support area for the euro. So I'm going to highlight this level as my first major support. Now take note, this first major support could likely be broken today, right? If we see a surprise rate cut by the ECB on, or if not, we may see, if we see a dovish outlook by this central bank, then we're likely to see the euro sell off harder, and we could see a potential bearish breakout take place. Now, should a potential bearish breakout occur at the first support, where is the next major support for the euro? Right, when we look at the market structure here back in February of 2024, right, we can see once again price making a very significant swing low bounce of this region here at 1.07 pretty much, right? This is a strong support area for the euro back in middle of February, which is where price could once again find strong support should we see a potential bearish breakout occur through the first support here. So second support, I'm going to identify my second support at 1.07 exactly. And if I zoom out a little bit more, no, I think that's fine. It's not necessary to reference this region here for now, but based on current price action, right, this is the next major support for the euro. So if we do see a potential bearish breakout occur for the euro today, then you can use the region of the second support to identify a suitable take profit zone for any short euro dollar positions. Right. Okay. What else can I do? There's another Fibonacci extension I can use. Okay, I'm going to run first. I'm going to run the retracement from here. This low swing low here on 2nd of April, going up to this high here on 9th of April. Okay, we do see in this case 127 and 161 extension levels lying well below the second support. So that's fine. We're not going to use it. For now, they're not relevant for now, but they could be relevant in the future. It's just something to keep an eye on. But for now, we don't need it, so let's not overcomplicate the analysis and we'll just leave it out. Right, okay, in terms of resistance, maybe the next other major resistance, I remember we mentioned that 1.0750 is an intermediate resistance here. Price has failed to break above this resistance for today so far. The next major resistance could be around this region here. See, we saw the euro make a strong pullback here on 5th of April. It found pretty decent support before bouncing higher. So this level here at 1.0908 previously functioned as a pretty decent pullback support level, which now could then function as a resistance. So for now, I'm going to highlight this as the first resistance at 1.0809. And of course, the next major resistance is simply going to be this pullback that occurred here on Tuesday, which is 1.0880. So that's where the second resistance for the euro sits at. All right, so these are the key levels for the euro. So take note, if we see a very dovish outcome at today's ECB meeting, we are likely to see a potential bearish breakout occur through the first support. And if that were to happen, we can then target the second support, the region of the second support at 1.0700 as a potential take profit zone for any short euro dollar positions that you may have. Right, okay, so these are the key levels for the euro. Let's look at the pound as well, right? Since we got GDP data coming up tomorrow, right? If similarly, right, if we saw a return of the dollar bulls yesterday, we're of course going to see pound dollar drop quite sharply as well, which is what we saw at when CPI data was released. Now, similarly here, right, when I look at the 4-hour time frame, you can see quite clearly this level here at 1.2530 is a very strong support level. It's pretty much like a multi-swing high. We can see find strong support once for the first time here on 6th of February, finding support once again on the 14th. And even here as well, on 2nd of April, we can see it bounce very strongly as well. So this does look like to be a very strong support level, pretty much like a multi-swing low support level here, which potentially could be broken as well, right? So we do have another potential bearish breakout opportunity, and this time it's on the British pound US dollar. So currently the first major support for the pound dollar sits at 1.2530. So we may have another potential bearish breakout on hand. Now, if should that bearish breakout occur through the first support, where is the next major support for the pound? So let's zoom out a little bit, right? And when we look at the market structure here in December, in early December or the first half of December of 2023, we can see that the pound has bounced off this level at 1.2511 quite strongly, right? Couple of times it bounced off first on the 8th of December, then again on the 13th of December. So this does signify a pretty strong support level for the pound. So I'm going to use this level at 1.2506 to identify as my second major support. Now, so coming back to where price is currently trading, right? So should we see a potential this bearish breakout take place, right? Remember, if we see strong data for the US once more, we're likely to see demand for the dollar pick up. So that means currency pair like this, pound dollar is likely to break through its first support, triggering a potential bearish breakout. And should that occur, or should that want to take place, then we can target the region of the second support as a potential take profit zone for any potential short pound dollar positions. Right, so take note, second support at 1.2506 around this region would be a good area to identify as a potential take profit zone for any short pound positions. Right, what about resistance? And we can see that there is a pretty decent intermediate resistance level here at 1.2573. Why do I say that? Right, previously price bounced off this level here on 5th of April, and then today as well, price was retracing higher for the pound dollar. This currency pair was retracing higher, but it does look like to have run into resistance around the region of 1.2573. So then this then creates a potential overlap resistance. This may not be the most strongest resistance level, hence I've identified it just as a intermediate resistance. Where the first major resistance for the pound is likely to come in is, of course, this pullback resistance level here at 1.2696 that has occurred on 9th of April through Wednesday, 10th of April, right? So this is where the first major resistance for the pound sits at. All right, okay. Is there any Fibonacci retracement? Perhaps we can run a Fibonacci retracement from here. This swing high here on the 8th of March, going down to the swing low here on the 10th of April. Let's pull up all the fibs. So when I draw the Fibonacci retracement from this swing high to the swing low here, remember it's Fibonacci, we always draw it from the left to right, whether it's a downturn or upturn, right? So for this downtrend here, we're drawing it from top left to bottom right, and these subsequent retracement levels here, 23, 38, 50, 61, and 78.6%, help us to identify potential resistance areas. Remember, these are potential resistance areas. They are not definite resistance areas because you can see quite clearly, okay, not yet, but for now, this region here where this pullback support occurred lies at 23.6%, and our first major resistance actually lies quite close to where the 50% Fibonacci retracement is. So in this case, I'm just going to keep uh, the 50% Fibonacci retracement on. 38, probably not necessary for now, and 23 or so probably not necessary for now. But just 50% to just highlight that to add additional significance to the resistance area at over here at 1.2696. All right, okay. So, okay, these are the key levels for the British pound, US dollar today. Right, okay, what else do we have? Okay, we covered the euro, of course, we have ECB, we've covered the dollar index as well, and also the pound because we have GDP data tomorrow. Right, okay, if there are any requests for any other currency pairs or commodities or even indices, please do drop the request in the chat box early so we have time to go through the analysis. Otherwise, let's just move on over to gold and see how this commodity is trading. Right. So for gold to truly appreciate uh, how much it has risen in recent weeks, right? Let's just start the analysis on the monthly time frame. So we can see, right, over the last 2 months, or rather since October of last year, gold has found strong support around the region of pretty much $1,600 per ounce, and it has bounced pretty strongly since then. Right. So if we look across this price level here, previously this was at $1,920 per ounce. Back in August of 2011, this was the previous all-time high for gold prices, and then it consolidated for a few months before finally pulling back, right? Sort of going through a bear market before breaking out of it as well. So this previous all-time high for gold at $1,920 per ounce was cleanly broken back in July of 2020. However, the move was not sustained, right? This bullish breakout move was not sustained. Gold prices actually retreated to consolidate around $1,800 per ounce. Made a second attempt to break above this level again. Once again, it sort of failed, retreated. Third attempt as well, it tried. It sort of failed as well because you can see it pulled back before finally the fourth attempt, it broke out of this major resistance zone quite strongly. So this was, when we look at this price level here, at 1,992, since August 2020, this was a major resistance level for gold prices, which is now likely to function as a strong pullback support as well. Take note, I'm on a monthly time frame here. So this was previously a very strong resistance area for gold prices, which is quite likely now to be functioning as a major potential overlap support as well, right? Because you can see here, price has indeed bounced off 1,992 three times, right? We can see it bouncing off in December of 2023, January and February of this year as well. So this creates an overlap support here. a pretty significant overlap support. Right. So of course, this level here at $2,365 is the all-time high for gold prices. So naturally, this is going to be my first resistance. Now, how could we identify a suitable second resistance, right? Considering this commodity is trading at the all-time high or very close to the all-time high, how are we going to identify the next suitable resistance area, right? This is where Fibonacci projections and extensions would come in handy once more. Right, so I'm going to run a Fibonacci extension. I'm going to try and find a suitable extension level. So by doing that, I'm going to start from a retracement from here, first from September 2011 all the way down to December 2015. Remember, we use the Fibonacci retracement tool to help us find the extension levels, which are greater than 100%. So the major extension levels lie at 127 and 161%. So you can see quite clearly 127% has already been broken through, and the next major resistance looks likely to be coming in around $2,460 per ounce, which is where the Fibonacci extension at 161% sits. Right, so for now, okay, first resistance here is fine, of course, the current all-time high. So then I would use the Fibonacci extension at 161% to help me identify a suitable second resistance, right? So that's about $100 above from where price is currently trading. Right, so this is how we can use the extension level here to help us identify a suitable resistance area. We can also use a Fibonacci projection. So this projection tool involves 3 points. So the first point is going to be here, December of 2015, going up to point 2, which is August of 2020, and then finally going down to the absolute low, which is here on September 2022. So projection, a projection, Fibonacci projection like this, as price is moving up here, helps us to predict how far a particular instrument could rise. So in this case, the major projection levels lie at 61.8%, 78.6%, and 100%. So Fibonacci projection has 3 major levels that we can use to help us predict where price could eventually rise up towards. So as you can see, 61.8% has clearly been broken, so we don't need that. Similarly, just like 127, we don't need 127 either. So let's get rid of 127%. And over here, let's get rid of 61.8%. However, when we look at the region of where the 78.6% Fibonacci projection lies, it sits very close to the extension at 161%. Right? So this creates the presence of 2 different Fibonacci levels would add to the significance of this resistance area here at $2,465 per ounce. Take note, we also have the Fibonacci projection at 100%. That sits at $2,643 per ounce. So should we see gold prices break above the first resistance and the second resistance, then we can use this projection at 100% to help us identify the next suitable resistance area for gold prices, right? So this is how we've done the analysis to help us identify major resistance areas when price is trading close to an all-time high, and we can't reference any other major swing high resistance or pullback resistance in the past. Okay, so let's move it down a level. Let's go down to the weekly time frame. Right. Okay, so of course, if we see data that's going to be in favor of the US dollar today, so we are quite likely to see gold prices pull back a little bit more, right? Although it pulled back quite sharply overnight, but when we look at it on a weekly time frame, this current weekly candle is still in the green. So now let's move back down to the daily time frame, move back down another level. Right, so you can see here, gold made an all-time high on Tuesday, a new all-time high on Tuesday, 9th of April, right, touching $2,365 per ounce. Yesterday saw a sharp pullback on Wednesday, right, because of strong CPI data. Price for this commodity does seem to be consolidating for now. And should we see another round of stronger US data, that's going to be bullish for the dollar index, that's going to be bullish for the dollar. That means dollar index is going to spike higher again, and potentially we could see gold prices pull back even more. Now, where would the next support level be, right? It's pretty hard to identify as clean support level as well, right? Uh, if I were to see, remember this first support was previously identified on the monthly time frame, but as we move down time frames, we may have to fine tune the analysis, right? So in this case here, on the daily time frame here, since we've gone down two levels, right, from monthly to weekly to daily, I think a more suitable first support level would be at about 2134, right? We can see price making this pullback resistance here on December of 2023, and as price broke above this level, it managed to find support just above this area here, right? So this does look like to be a pretty strong support area for gold prices. But then again, still, let's see if there's anything else that we can try and reference as well. Maybe there's another level here, right? We can see another pullback level here, price running the resistance here on 8th of March. Then sort of running the resistance again on 27th of March before finally going higher. So what was previously a pullback resistance could then potentially function as a pullback support now. And if I were to look at anything else, maybe we have to go down into the 4-hour time frame and try and find another suitable level. Right, okay, now take note, we're on the 4-hour time frame here. Okay, so maybe this support level, I'm going to fine tune it a little bit. Right, you can see here, this is another decent overlap as well, very similar to this price level here at 2134. So this could be another strong support zone for gold prices. But as we move up, I can also see currently another intermediate support level here. So I would identify $2,322 per ounce as an intermediate support level. You can see here, since Monday or since this week, right, since the beginning of this week, gold prices have managed to stay above this level. It may not be the most strongest support, hence I'm identifying it as an intermediate support here. There's another level that I see as well, another overlap level here at 2,265. This is another support level for gold. We can see it running into resistance here on 1st of April. And then when it broke above this level on the 2nd, it found strong support on the 3rd, as well as on the 4th of April before bouncing higher. So this creates an overlap support level here. So that's also another area where I see pretty decent support. So if we do see um, gold prices break lower today, below $2,322 per ounce. Take note, this region of where the overlap support lies at 2,265 and the bullish Ichimoku cloud here, right? This region here is likely to offer strong support for gold prices. So that's in the region of $2,270 per ounce. So if we do see gold prices break lower, looking at this region at about 2,270 to 2,280 would be a pretty decent area to target as a potential take profit zone for any short gold positions that may materialize later today. All right, okay, there may be a Fibonacci retracement that I can use as well. Right, okay, I'm going to start from here. This low here on the 14th of February, going up, of course, to the all-time high here. Let's pull up all the fibs and see if they align with any of the levels that we had identified. Right, okay, we can see that a 23.6% retracement aligns quite well with this overlap here. So that's pretty good. So let's just keep that on hand. We can also see the 38.2% Fibonacci retracement aligned very well with this other overlap support here as well. And we can also see the 61.8% Fibonacci retracement aligned very well with the support at 2,134. So for this analysis, I'm going to keep 23, 38, and 61%. Right, so these are the key resistance and support levels for gold prices for today, based on the 4-hour time frame. Right, so take note, if we do see demand for the dollar pick up later today, and that means we may see gold prices break lower. Should that were to happen, we can target this region here around the 23.6% Fibonacci retracement as a potential take profit zone for any short gold positions here. Right, however, take note that the data could swing the other way as well. Right, if PPI comes in softer than expected and we see unemployment claims actually come in higher, then this set of data would then function as a bearish catalyst for the dollar. So if the dollar is going to sell off, that means gold prices could find strong support around $2,320 per ounce, and potentially reverse around this region to break higher, to rise towards the first resistance, and perhaps even break above the current all-time high. All right, okay, so these are the key levels for gold. Right, okay, as we come towards the end of today's webinar, are there any requests for any analysis? Right, maybe the indices or any other currency pair? Right, if not, then I will cover the US 500. Okay, the US 500 is an instrument that tracks the S&P 500 futures contracts. So for indices as well, you can see they are trading at all-time highs, close to all-time highs. Right, so I'm on a weekly time frame for US 500. So quite clearly, the first resistance is at 5,276. Now, how are we going to identify the next resistance area? Should we see price reverse and break through the current all-time high? Right, as I mentioned, we can use a combination of Fibonacci projections and Fibonacci extensions. Right, so let's start with a Fibonacci extension first. So that means we're going to run a retracement from here, 3rd of January 2022, going down to 10th October 2022. Remember the key extension levels lie at 127 and 167%. We can see quite clearly that the index has broken above the extension at 127%. However, we can see that it has not yet reached the extension at 161%. So we're just going to keep 161%. This could potentially be a next resistance area should the current all-time high be taken out. So let's just label it as second resistance for now. Maybe there's something a little bit closer that we can identify. Right. The next step or the next tool that we can use would be the Fibonacci projection tool. So that's this one here, right? The trend-based Fibonacci extension tool. So this involves 3 points. First point is going to start from here, week of 23 March 2020 up to point 2, week of 3rd January 2022, and ending at point 3, which is the week of 10 October 2022. Remember the key projection levels lie at 61.8%, 78.6%, and 100%. So let's just pull up all these levels first. Right, so we can see 61.8%. The projection is 61.8% has already been broken, so we're not going to use that anymore. However, we do see the projection at 78.6% aligned quite well with the extension at 161%. So this adds to the further significance to the resistance zone here. Right, so we have a resistance zone that begins from 5,563 all the way up to 5,640 for the US 500, right? So should we see price for this index reverse and break through the current all-time high, and targeting this zone here would be a potential take profit zone for any long US 500 positions, right? And of course, if the index continues to break higher, then the next resistance could likely come in around 100% Fibonacci projection, which is at around 6,000. But for now, that's of course quite simply too far from where the index is currently trading. So we're just going to keep 78.6% and get rid of 61 and 100. Right, okay, what about support? Right, what about support? Right, as you can see here, this level here at 4,840, this was the previous all-time high that was set in January of 2022. This previous all-time high could now potentially function as a major pullback support level, right? So on the weekly time frame, this would be the first major support for the US 500, right? This was a resistance here in January of 2022. We can also see it ran into a little bit of resistance here at the end of December 2023, right? So you can see previous resistance functioning again as a resistance area for a couple of weeks before the index broke higher. Right, okay, so first major support is here is quite clear. What about any intermediate supports? Right, we can probably find those by moving down a time frame. So let's go on down to the daily time frame. We can also run a Fibonacci retracement now. We are going to start this retracement. We're going to start this retracement from here. This low that occurred here The swing low occurred here on 27th of October, of course, ending with the all-time high here on 1st April. Let's pull up all the fibs. Right, we can see the 38.2% retracement aligned very well with the first support. That's fine. And we can also see there's a 23.6% that aligns quite close to another overlap here. So I'm just going to keep 23 and 38. And then I'll show you where is a pretty, where I've seen a pretty decent overlap level as well. Right. So when I look at this level at 5,048, right? We can see price running into resistance here on 12th of February, 16th of Feb, before the index finally broke higher. And when it did, it found decent support here on 28th of February, as well as on the 5th of March before edging higher again. So this level here at 5,048 does look like to be a pretty decent overlap support level, which aligns quite close to the 23.6% here. So more of a zone, support zone rather than an absolute level. Right. So if we see the index pulling back, right? If we see inflation continue to pick up in the US, right, especially with today's PPI data, we could see equity markets pull back a little bit more. So if that were to happen, the US 500 could find support within this zone here, right? If we look at this zone here, highlighted by my green circle, we can see this is the intersection between the bullish Ichimoku cloud, which is in green, the Fibonacci retracement at 23.6%, as well as this overlap support level at 5,048. So we have three factors that contribute to the identification of a potential support zone. Remember, a bullish Ichimoku cloud can help us identify support areas as well. So if we do see the US 500 continue to uh, uh, drift lower, and if you have shorted the US 500, perhaps after you see this index make an all-time high and sort of drift lower, and if you have shorted or if you have a current short US 500 position, right, you can use this support zone here as a suitable take profit zone, right? So anywhere between 5,000 and 5,050 would be a suitable support zone to identify, or take profit zone to identify for any short US 500 positions that you may have. All right, okay, so this is the analysis for today. All right, before we end, I'm just going to launch a poll, and I'll truly appreciate it if you guys, if all of you can give your feedback as well. And yeah, do look out, take note of today's ECB meeting, as well as the PPI data, news release, and of course, the unemployment claims later today. They're definitely going to inject much higher volatility into financial markets today, right? Be it currency markets, equity markets, and even for commodities such as gold as well. All right, thanks everyone for the feedback. I truly appreciate it. All right, just going to end the poll now. And all right, so before we end, right, take note. These are the key events that are lined up. ECB monetary policy statement today, followed by PPI data and unemployment claims. And tomorrow we've got GDP, UK GDP data as well. Right. So ECB main refinancing rate is going to be announced at 12:15 p.m. GMT time, followed by President Christine Lagarde's press conference at 12:45 p.m. In between, we've also got PPI data and unemployment claims out of the US at 12:30 p.m. GMT. And tomorrow, just before European markets open, we've got UK GDP data at 6 a.m. as well. All right. All right. Thanks everyone for tuning in today. Do look out for all upcoming webinars by IronFX. And I wish you all the best in your trading journey. And I'll catch you all at the next webinar. All right. Thank you, Alinda, for the kind words. Thank you very much. All right. Take care, everyone, and have a great trading week. Right. Okay.